It's that time of year, tax season is upon us once again. Will you be one of the many people making these 7 common mistakes when filing your tax return? Hi. My name is Kat and I'm a chartered professional accountant. On this channel, we discuss Canadian tax, accounting, and personal finance, with the goal of helping you keep more of your hard-earned money in your own pockets. Today's video is all about 7 common tax filing mistakes you want to avoid. We'll go over 1 mistake related to income reporting, 3 mistakes regarding expenses, deductions, and tax credits, and 3 administrative mistakes. At the end of the video, I'm going to share a tip that will help you better prepare for tax season going forward. So let's jump right in. The first common tax filing mistake you want to avoid is not reporting all of your income. This may seem obvious, but it's actually pretty easy to accidentally omit some sources of income. Everyone knows you need to report income from your job, from self-employment, rental income, and investment income. But there are actually many more sources of income than this, such as pensions, employment insurance, support payments, and even some scholarships. Plus, did you know that you're supposed to report income received from peer-to-peer sales, such as when you sell something on Facebook Marketplace or Kijiji? The same thing applies to things like ride-sharing, such as Uber driving, as well as renting out part of your home, even if it's just for a short period of time. Also, with the general transition from paper to online, it's easy to forget about something like a T4 slip for a job you only worked at for a few weeks at the beginning of the year. So, all of this being said, what happens if you don't report all of your income? You risk the CRA reassessing your tax return and charging you interest and penalties on any tax owed for that unreported income, not to mention needing to pay the income tax itself. Bottom line, make sure you report all your sources of income when filing your tax return. The second mistake people tend to make is claiming personal expenses. As a general rule, the only amounts that can be deducted on your tax return are expenses incurred to earn income, such as from a business or investments. These expenses must be reasonable. Deductions determined by the CRA, such as RRSP contributions. And tax credits, also determined by the CRA. Anything which doesn't fall into one of these 3 categories is not tax deductible. It would indeed be nice if we could claim groceries or diapers against our income taxes, but that's unfortunately not the case. Third, another common mistake is claiming expenses that were already reimbursed. For example, moving expenses are tax deductible if certain conditions are met. However, if your employer already refunded you for these moving expenses, you can't claim them on your tax return too. That's double dipping. The same thing applies to medical expenses. If your expenses were covered by your group health insurance plan, you can't claim those same amounts again when filing your taxes. You can only claim the portion which wasn't refunded or covered directly by the plan issuer. Now, although people sometimes claim things they shouldn't, the next mistake is actually the other way around. The fourth common tax filing mistake is missing out on tax deductions and credits you're actually eligible for. Deductions reduce your total income, so you're taxed on a smaller amount, while tax credits reduce your taxes directly. The CRA's website actually contains a list of everything that's available to be claimed, so you can check to make sure you're not forgetting anything. For example, first-time homebuyers can benefit from deducting contributions made to their FHSA or claiming the homebuyer's amount, a $10,000 credit. Many people also don't know that certain renovations are tax deductible or that donations will give you a pretty interesting tax credit. For more information on tax deductions and credits, including 5 which are commonly overlooked, you can watch my video linked in the description box below. Before we go on, if you've learned something so far, please take a second to give this video a like, it really helps the channel. Moving on to the 3 common administrative mistakes, the first one is not keeping good records to support your tax return. This includes all your tax slips, such as T4s, T5s, and so on, as well as receipts to back up any expenses, deductions, and tax credits you claimed. You don't actually have to send all this paperwork in with your tax return, but you'll need to provide it if asked by the CRA. If you don't have any records, your claims will be disallowed. This means you'll owe taxes as well as interest on the amount which was wrongfully claimed. The CRA actually recommends keeping these records for at least 6 years in case you get reviewed. The sixth mistake is waiting until you file your taxes to update your marital status. We're required to inform the CRA of a change in marital status by the end of the month following the change. For example, if someone's status changed in July, they have until August 31st to inform the CRA. This can be done online, by phone, or by mail. The reason it's important to update your status is because several benefits are calculated using the adjusted family net income. Having an incorrect marital status can mean that you're receiving benefits you're no longer eligible for, or the opposite, not getting money you're actually entitled to. Someone who became common law during the year but who waits until tax season to update the CRA risks getting benefits such as the CCB clawed back. This will result in a balance owing to the CRA for the amounts which should never have been received in the first place, plus interest on top of that. Finally, the last common tax filing mistake is missing the deadline. Tax returns are due on April 30th, except if you or your partner are self-employed. In that case, your return is due June 15th. That said, if you owe taxes, your balance is still due on April 30th, regardless if you're self-employed. Interest for late payments begins to accrue on May 1st. The only time there's an exception is when April 30th falls on a weekend or a public holiday. In that case, you have until the first business day after April 30th, and interest begins to accrue the business day after that. Now it's time to go over a simple tip that'll help you avoid all of these mistakes year after year. The best way to avoid mistakes when it comes to filing your taxes is to plan ahead and get things done throughout the year instead of waiting for tax season. Here are 5 concrete things you can do. 1. Take note of all your sources of income as they happen, particularly for occasional things like side gigs or a job you quit during the year. 2. Go through the CRA's list of deductions and credits to see which ones apply in your situation. This will tell you which receipts you should be keeping. 3. Store receipts in a safe place and classify them as you go, for example, donation receipts grouped together, medical expense receipts together, and so on. 4. If an expense you incurred gets reimbursed, remove the original receipt from wherever you're keeping your tax paperwork to avoid claiming this amount a second time. Last, make sure you have access to your CRA online account. This is the easiest way to update your information, including your marital status. Doing these 5 simple things will ensure that you're not scrambling and forgetting details come tax season. Plus, there's no reason why you should miss the filing deadline if you've got everything organized and ready to go. So there you have it. We discussed 7 common tax filing mistakes you want to avoid, including 1 mistake related to income reporting, 3 mistakes regarding expenses, deductions, and tax credits, and 3 administrative mistakes. I also shared a simple tip to help you better prepare for tax season going forward. That's all for today's video. I hope you found the information helpful. Don't hesitate to ask your questions or submit special requests for future videos in the comments. Be sure to hit that notification bell if you want to be the first to know when a new video is released. Thanks for tuning in, and I'll see you next time.